Hey guys, Mike here. So obviously you can see I am not in my usual filming place in my sunroom in Florida. We are up at my mother-in-law's house on a mountain in northern Alabama in a house she bought 3 years ago, it was built in 1878. So that's the original fireplace back there. So 145 years old. So yeah, and it's cold. Got up this morning, it was about 18 degrees, and so Florida is not that cold. We're not on top of a mountain, so should be back in my regular filming area. Hopefully Saturday if we don't get snowed in up here, but we'll see how that goes. Wish me luck on that. But I definitely couldn't put a video out last night because we were still driving up here. But 2 days in a row of selling off, so I definitely don't want to miss this. So I jimmy rigged something up here just to make it happen. As long as I have a computer and a mic and a camera, we can do it, right? So definitely want to go over a lot of stuff with you guys. I know I've been hearing from some of you guys in the comments, getting emails, all kinds of stuff. But let's go back to what we've talked about, right? We're getting some red, which I know a lot of people think is bad. I actually think is a good thing. But we've been talking about this for weeks, right? We're overstretched, and we just went over this little thing right here, talking about S&P 500 index returns after 9 consecutive up weeks, and we said, look at week 1. It's only happened 9 times in history. This is only the 10th time, and what do you see? A lot of red in that first week after. So it'll be week number 10. If you don't even count the one where it's 0.1%, really you're talking about like 7 out of 9, either flat or red. And even the up weeks, 0.7, 0.4, not much. You see a lot of negatives, negative 1.6, negative 1.4, negative 1.2, negative 1.3. This is a short week, of course. And so, not too much of a surprise. And also, if you do get these morning news briefs, you shouldn't be surprised either because we talk about this stuff. But if you don't, that's why I always track fear and greed, right? If we're in extreme greed, that's a red flag warning. Say, okay, and we've been here for a little while now, right? If you're seeing this high percentage of stocks, not just above their 50, above their 200, then, I understand, yes, we've talked about breadth, which is great, and the expansion out, but eventually profit taking is going to take place. That's what's going to happen. We talked about this last month. Remember, people want to sell so they can avoid taxes for a whole year. And what do you see in selling? More than anything else over the last couple of days, it's been the equal weight ETFs. Okay, all those stocks that got bought up, that these people are up, man, massively, 100, 200, 300, 400%, probably more than that if they're in options, things like that. And so people are taking profits on those stocks. That's what's getting beat down more than ever. Look at these. Here's the sectors. What we talk about: real estate, fintech, biotech, all those stocks, PSCT, which is small cap technology, right? They were all at the top. These were all the big green ones for just days and days and days. And what was on the bottom, right? The defensive stuff. And now all of a sudden, the defensive stuff being getting rotated into, even some of the Mag 7, somewhat are getting rotated into, as long as you're not a semiconductor or Tesla for that matter, which we'll get into. And what's the big one? The one I couldn't talk about, I didn't do a video yesterday. The Apple downgrade, okay? We talked about this in, was it Monday's video I did for you? Watch Apple, okay? As Apple goes, the market goes. And we said, okay, there's many ways to look at it. Double top, lower highs, lower lows are forming here. What really surprised me, and remember, when do downgrades come? They come when there's already momentum pushing it down. You ever notice that? That's how it works, right? So he took full advantage of this. And we talked about his head and shoulders. I said, well, I don't think I'll play out to the T. But actually, yeah, on the hourly, it played out to almost a penny. And so, and that's one thing that's really affecting the market because remember, Apple's the biggest weighted stock out there. It's the big daddy of them all. And when it goes down 4% like it did yesterday, oh yeah, the market's definitely going down. Okay, I mean, there's just no doubt about that. And so, some nice little manipulation. Because if you notice on the downgrade, their price target went from 161 to 160, $1 difference, right? But what they see, they saw that weakness. It was already being pushed down. It was already showing bearish market structure. They're setting it on level, and they go, ooh, if we can just do a downgrade, push it down even farther, right? And so, I guess we shouldn't be surprised. We've seen it many times how this happens. And when you look at the data that came out, right? So JOLTS jobs comes out. Again, we'll get the opposite tomorrow. But, it's showing, is the job market softening? Sure, should be, right? I think we'll get even more accurate data as we move away from, December and stuff where people are doing seasonal hiring and things, but you look at the manufacturing stuff, and I keep talking about this, nobody pays attention to it because we're 70% services, but it's still in contraction. I mean, you can see sitting at 48.10, right? Up, it is up from 45, but still under 50, which is in contraction and stuff. And when we zoom in here and just kind of look at it, again, I'm going to draw a line. Anything below 50 is a contraction, okay? This only shows the last 4 years and everything, so obviously 2020 took it into the toilet. But, you know, this is something that has to start improving. Isn't going to finally start to move up. This moves in cycles like anything else. It's like I did a members video showing them that. You know, you look at the prices paid. Again, this one right here, you can see the cycles very easily on this one, but this one's going down too. So a lot of people are saying, well, you know, I guess we don't have to worry about inflation and stuff. And people look at this data a little differently, but I mean, you can clearly see that, you know, this goes in cycles up and down. Remember, this goes all the way back to 2004. So there's 20 years of data right here you can see. And so it's moving up and down. The question is, are we about to cycle back up? Right, when it comes to prices paid. Now, another big one for Apple, if you're really looking at this is the line to draw in the sand if this pressure continues to the downside. And guys, before we continue, please hit that thumbs up button. I really appreciate it when you guys do that for me. It helps people find the video, which a lot of new people have been. And if you like the content, think about subscribing. I appreciate all your support. And when you look at Apple, here's what we're talking about. This trend line right here, this is a logarithmic scale, okay, because it goes over a long period of time. And so it smooths it out. That line right there goes all the way back to 2003. It bounced last year off of it. It bounced the year before that off of it. That's what I'm talking about when I say logarithm. See how it smooths it out? And when you go over a long data point like this, long period of time, you want to smooth it out. So you can see if the downside continues, it's only like 177 to 180s, depending on when it would hit it. If this, you know, pressure continues, that's not very far below. I see it breaking it. Not after all the mess we've been through. If it held up this long, I don't see it at all. But that would be, you know, the base of the line in the sand right there. If that broke, that would be pretty big, especially for Apple and stuff. But again, so far this is just a regular pullback. So we were well overextended, and one that's really been needing a pullback was IWM. We've been talking about it, right? And that's why I said watch that 50 Fibonacci. That's normally where you get a rejection. We held up on top of it for 2 days, but I've been saying for at least 2-3 weeks now, I'd love to come back down, test that trend line right there. Also, you got a gap it could fill. You got a fair value gap right there it could react off of. Below it, you got all those moving averages. They're consolidating. The 50s making a bullish cross over the 200 and the 100. But again, you see that MACD down there. It's a bearish MACD cross. The momentum was waning again because people are up huge. If you're in that triple leverage ETF, or if you're doing options on this, or just if you've even bought IWM outright, that is a huge move. Remember, always keep things in perspective. Don't let people scare you out of stuff. Because I know the bears and the fear mongers are going to come out in full fold and everything. But this is a well overdue pullback for sure. And until something else tells us it's different, we just keep playing it like that for now. But again, that's what I'll be looking at and be happy with if it did that. Now, Tesla, obviously, got another move down. Sold off Friday, held up Tuesday, reacted off that 4-hour fair value gap twice on Tuesday. But today, cut right through it like a hot knife through butter and left behind a RTH gap. But understand, learn this, on a fair value gap, if you see any stock for that matter, cut through it, whether it's going up or down, and doesn't have a reaction like you saw yesterday, that is a bad sign. You're going to see much more move, either down or up, depending on which way the stock is going. Today was down. And as soon as I saw it cut through it, it was like, oh, this is not good. I know a trader, that's all he does is play the fair value gaps, and he waits for stocks going up or down to cut through it and have no reaction, because that means there will be continuation in that direction, okay? Because you're supposed to have a reaction off those imbalances. That happens probably 95% of the time, as I've showed you. And then once it starts cutting through it, once it got through that 100, all the areas of confluence, those two trend lines and everything like that, then the question was, where is it going to stop at for the day? That means it's going to stop for the week or anything. And you can see as it came back up, now you got those trend lines. That 100 moving average is resistance. Below it, you have a lot of support with the 200 between like 225, 233 if it continues to decline. But now I'm trying to figure out where it was going to stop a day. And you look, you go, oh, well, look at that. There's an RTH gap. Right below that is 2 fair value gaps on the hourly, right? Where did it stop? If I could draw a line here for you, this is a reaction. This is the reaction it's supposed to have right there. Good bounce. All right, that's what it's supposed to have. That means it's going to not come back down, retest again, go through it, but still, that's what you're looking for when you're looking for these fair value gaps. Now, of course, where is this going to go tomorrow? You know me, I'll tell the truth. Your guess is as good as mine, because now that you broke down those trend lines, and that 100 is going to be resistance, okay? If it can break through tomorrow, obviously I think we're heading higher because you got a lot of RTH gas and fair value gas that have been left behind in this sell-off to try to move it back up. But again, it's just about watching the option flow and see if we can get some call spreads to start to come in, or I should say call sweeps, excuse me, to start to come in for Tesla versus all the puts that have been flying in today. Because the truth was, the delivery numbers were fine, right? I mean, you saw them set another record. Their Q4 deliveries, I mean, over the last at least, was that 6 years, have been tremendous. So that wasn't the problem. Again, they got caught up in this sell-off right here, and they're one of the Magnificent Seven, just like NVIDIA and some others that got sold off quickly. So we'll see if they actually recover or not. Now, going into 2024, you're looking for the same thing we did November and December, where you're looking at areas that have just been absolutely hammered and beat down, and what are people talking about, right? And I'll tell you one, I'm just putting this to you, you know how I feel about these kind of stocks. I don't believe in investing them in at all, but I'll trade the heck out of them, is the Chinese stocks. This is what's getting a lot of talk. I know Dan Niles is doing it. I saw some other two big folks talking about this right here because they've been so beat down, and you saw today, and this is what you want to look for. When you have sell-offs like the last 2 days, what stocks are green? What areas are holding up really good? And when you look, all those Chinese stocks were green. And I don't think it's a coincidence because when you're looking at it, you see BABA, right? What you got to see in BABA, it's up 2% a day when a lot of other stocks are down. But what you got to see in BABA is this right here. This MACD has to get above the zero line because it's been this downtrend forever. It seems like it hadn't been forever, but it seems like it, right? But to move out of it, you have to get the MACD above the zero. That means momentum is really starting to push up. And the other thing is, you'll see on the RSI, because the RSI will break to 50 well before the MACD goes above that zero line. And when those two combine, that means you have nice momentum. Continue to push it up and push it up. And so that's when you really want to get involved. And at least that's when I get involved. I don't sit here and bottom fish some and say, well, maybe this is it. It's kind of like, am I starting to see momentum shift? Because that's really what you're going to see, because that's big money. That's not us to do that. And you can see is what I'm talking about right here. See how that RSI starts setting higher highs right there? The momentum's picking up. And that's when you get these nice moves. But until then, I mean, look at that. No, it could just turn right back over and start selling back down, right? Because it's a Chinese stock. And again, the problem is their government's the problem, because you don't know when they're going to come out with some of the stupid rule that's against business, right? Because when you look at the metrics and fundamentals of these stocks, they're way undervalued compared to like our Mag 7 and stuff. But the problem is there's not a business-friendly environment. And you look right here, this came out today. Chinese urban workers see record drop in hiring wages. Like, it's been negative for the last 3 different quarters, but you can also see it's a cycle, right? It's not new. You can't just take things in like a 1-year context. You see it happens. Now, the fact it's been negative so many quarters in a row seems kind of iffy. But again, that's the kind of stuff you want to look for. And I'm just putting it out there to you and letting you know what some big firms are talking about and everything. And I understand what they're talking about. I get it. And that's what happened in November, December when they started rotating. And again, I'm just putting it out there to you. You know how I feel about Chinese stocks. I've made it very plain. But again, a lot of you guys are in them. You ask about them. So I'm putting it out there. Then a lot of big firms are talking about this, saying, this could be a good 2024 for them. I'm actually going to do a members video on this just to come up with some stuff. I've never talked about this before. I've never even found it before. I don't know if I believe in it, but I was like, I feel like my duty is to put it out there to you and let you decipher the information for yourself, because you're smart folks. So we'll see how 2024 works out for them. But when it comes to economic data, now we're going to get into the 2 days where you're really going to get a lot of economic data, okay? And so we're going to have ADP employment change, continuous jobless claims, initial jobless claims coming out before the market. After the market, you're going to have S&P Global Composite PMI final, and also some services data. So we'll see, how the market is going to react on that. So be careful if you're going in heavy and then all of a sudden here comes some more data coming out. We've seen how the market likes to react off that. I will say we did get the FOMC minutes. Remember, these minutes are old. These are from the last meeting, right? But they did just basically talk about, one, they see an area where it's like, okay, yeah, we don't have to raise anymore. So I think the pause really is official unless something crazy happens. I think we all know that. But the biggest one was there was very few people talking about cutting rates, okay? And that could be something else you're looking at in the market where they're saying, they're supposed to be cutting in March. Remember we talked about this? What if they don't cut in March? Well, guess what? They just sell the market back off. They price it in, okay? So that's what they do. That's what they call it and stuff. So, but that could be another thing that's weighing on it. But the truth is, this is just red for reasons, many reasons probably. One, maybe they are trying to price in. There may not be Fed rate cuts, wink, wink. Two, it's just way overextended. So many of these stocks and crypto stocks and all this stuff, way, way overextended. All right. This is how the market moves. It goes up and down. just like this right here. Woo-hee, you know. And so, and I think what that chart showed you where it shows how many 3% pullbacks, how many 5%, 10%, 15%. Well, you get many 3%, right? You'll get at least probably 110% this year. It's usually your average, okay? And then, you know, what is it, 5%? I think you get maybe one if you're lucky, something like that on average, maybe two or three, right? And so no big deal. Like I say, you just got to have your list, your money and everything, and excess capital available in the stocks you want to DCA in that you believe in, and you do your thing. So, and just, you know, have a perspective, have your levels set and all that good stuff, and follow your plan. Don't anybody, you know, sway you a different way unless you just trust them that much. So anyway, hope you guys got something out of it. Again, I'll be in this room for the next few days and trying to keep you updated and stuff. So, and just pray for me that I do not get snowed in Upper Alabama. I'd appreciate that. So please hit the like and subscribe button if you got anything out of it, guys. And I will see you tomorrow.